Good afternoon. This is Keith Brown with Commodity Consulting with some commentary for Monday. It's about 2:20 Eastern Time. We are, of course, starting another week of the shutdown of the federal government, which is certainly hampering at least the flow of news that so many traders and analysts rely upon. I'm thinking today we will not get a crop progress number to come out, which normally it does at 4 o'clock, crop condition numbers. We probably will fail to get an export number this week. And of course that does put pressure on some of the markets, mainly the shutdowns affecting the financial markets. So the stock market was down about 80 points, still is right now. The U.S. dollar was down, which should have been a little friendly to commodities, but that's not the overall case. Cotton took a big hit today, nearly went limit down. We finished down 300 points. And we think that's based on the knowledge that the speculator once again built himself up in the market. I think the last commitment of traders report before the government went dark, so to speak, showed the speculator had accumulated a 57,000 net long position. That's not as large as he had in August when the market tapped out, but certainly large enough from the recent low. I think looking at it, people just a little bit frightened about the industrial side of the world, and so we had things like cotton and copper to fall today, even though the dollar was up. Crude oil fell today. The grains, on the other hand, were able to stick it in there. There's some cold weather around. I don't think that's the main impetus for that. I think this falling dollar and the fact we still, despite some of the negative numbers, we're just from USDA, we're still thinking about that the crop is not as record as we thought record might be. So corn today finished up around $4.50. That's up about 6 cents. Soybeans clawed their way back to close to $13, up about 7 cents, and wheat is much closer to $7. So despite the fact that we're in the seasonal tug, these markets are able to stay intact and stay up. And it looks like to me, if we're not going to get a supply-demand number out later on this month, that pressure is a little more on the bears than it is on the bulls, because certainly the numbers have fallen to the bearish side. So again, we are starting the week without the government data that we've come accustomed to trading on. I don't know that we're going to have an end in sight on that, because October the 17th is the debt ceiling. So let's see what tomorrow brings. Bad day for cotton, but a good day for the grains. Have any questions or comments, give us a call. 1-800-910-1910. Thanks for listening.